Hello, I'm Jessica Amir, a Senior Market Analyst with Bell Direct. Today we're talking electric cars and what you should consider when investing in the megatrend. We know Norway and the Netherlands are totally banning petrol cars, and 30 countries are planning to be emission-free by 2050. And in Australia, the Aussie government thinks in 9 years, over 70% of new cars sold will be electric. So car makers, they're taking centre stage on global markets, and on the ASX, lithium companies are producing some of the best returns in the market this year. Pollak from Loftus and Tim Samway from Hyperion, they're investment managers and here to share their insights with us today. Gents, thanks so much for your time.
Great to be here. Thanks, Jessica.
It's my pleasure.
Alex, let's start with you. What do you think investors need to know about the global push for electric vehicles?
Thanks for the question, Jessica. And the simple answer is it doesn't matter what Tesla and other companies, car companies say. The most telling piece of evidence that it's really going on is the push by the oil companies, BP and definitely, and Shell and a number of others besides. They're now talking about net zero emissions by 2050, and they are significantly changing their portfolio of energy assets to include solar and wind and away from oil. So, the car companies can say whatever they, want to say, etc. But the real acid test is what the fossil fuel companies, oil companies, are saying and doing. And what they are saying and doing is getting ready to move, or indeed moving to a portfolio of renewable assets. So it's real because they're preparing for a future without gasoline. Just investing in index funds, so to speak, that might contain, as they normally would, a portfolio of oil companies and a portfolio of car companies that may or may not be moving part of the push to electric, that doesn't cut it anymore. You need to be actively managing what it is you're investing in so that you have exposure to the fast growing area, which is electric vehicles and renewable energy. That's the kind of simple takeout for investors. And you don't get that by investing in most index funds, so to speak, which still have, heavy components of fossil fuels in them, and possibly even car companies that are not making the shift.
Tim, what do you think investors need to know about the global push for EVs?
Yeah, it's a one-way street. That is, it's one way and inevitable. As you mentioned, 30 countries and counting have set sunset dates on internal combustion engines, ICE engines. So, Norway and South Korea are up first in 2025. Major countries like Germany and UK in 2030, and even the car-addicted American state of California in 2035. So there'll be virtually no development of internal combustion engine vehicles from here on in their technology. So the challenge is for existing companies making fossil fuel cars will be how to make money through all of this, because they've amortized the cost of producing their ICE engines, their ICE platforms, and so they're going to have to use that profit out of those existing cars to fund the switch, and it really will cost money for them to make that switch. There's this disparity between existing car companies and Tesla, and really that's all just about future profitability. That is, there's a whole lot of existing businesses that are going to struggle to make money while Tesla's making money because they're only making EVs. So as the tipping point approaches, there'll be issues like the availability of charging infrastructure, which will be solved. And also there's the trending lower cost of purchase and ownership. So what will happen is EVs will just get cheaper as they scale up. You might find it challenging to find a petrol station near your house in the next decade. So that's where this real challenge will come home to roost, because people will be forced at that point to buy EVs. And finally, full self-driving will change everything. So once fully accepted, owning a car will only be for the wealthy. That is, rideshare will be available, and owning a car without full self-driving will be like owning a horse after cars arrived all those years ago. Sure, it's fun to ride your horse, but it becomes impractical to use it on a day-to-day basis for commuting.
Tim, very entertaining and insightful. Back to you, Alex. When it comes to the rubber hitting the road, how can investors get involved in this global shift towards electric vehicles?
Well, the obvious things are, by lithium companies, get involved in wind system companies. Those are all real things to do. Identify the car companies that are making the shift. Maybe you buy Tesla shares, although that's not our view right now. There's a number of other ways to play it. I mean, we run a disruption fund, and one of the thematics in that disruption fund is the push to electric cars, and it's the Loftus Peak Global Disruption Fund ETF. So it's one security that gives you access to that theme and a whole bunch of others as well. But there's a number of different ways that they could buy VW or Daimler or Ford. There's many different ways to access it.
And Tim, what do you think? How can and should investors get involved?
Yeah, so it's really hard. You can buy Tesla. We think that that's your best opportunity. Now, that's a challenge, buying it from Australia. Our Hyperion Global Growth Companies Fund, which is an ETF, HYGG, has a 12% weighting to Tesla, so we're backing it for the long term. Tesla have a 1 to 3 year lead in just virtually every part of the supply and production chain. They have the lead in batteries, motors, software, performance, mileage, construction. Their distribution system is aligned. Their cars are designed as EVs from the ground up, not an existing internal combustion engine converted. Their margins are higher. They're releasing new, smarter, cleverer, cheaper batteries. They're removing cobalt, which is toxic and potentially unethical because it comes from the Congo. They're using silicon, cheaper, and so on. There's just half the cost of a car, an EV, is the battery. It's just a ridiculous amount. And that's why so many non-Tesla cars actually do feel like $30,000 cars, but cost $60,000. They also have the lead in autonomous software. So this is where the car will do most of the driving for you. It'll open up rideshare. In fact, it'll open up a lot of forms of transport that have been traditionally public transport, for example. They have the most miles traveled, and they actually have the most data. So we'll learn more at how far they've gone in this in the Tesla Artificial Intelligence Day, AI Day, that's coming up in the next couple of months. Unfortunately, a lot of individual components of EVs will just become a commodity. That is, they'll lack a sustainable competitive advantage. So whether it's lithium or batteries or parts or whatever it is, they just become commoditized very quickly. That is, the superior product to the consumer is actually the only long-term sustainable competitive advantage. So really, you've just got to produce a very superior product to maintain that ability to charge a margin. And Tesla are innovating and ramping up very dramatically. They continuously innovate. They're opening new factories, Berlin, Texas. We think they can get to the point where they're producing 10 million cars a year. And so that the result of that is that they'll be worth many times today's current share price.
Tim, Alex, thanks so much for your insights.
Thanks, Jessica.
Thank you very much, Jessica.
So there you have it. If you want to invest in the electric vehicle megatrend through the ASX, you can buy stocks directly. There's a list of electric vehicle stocks on Bell Direct's Strategy Builder. Just click on the Powering EVs theme. Or if you want to invest in an EV investment that tracks the performance of, say, 30 leading electric vehicle car makers and lithium companies from Tesla to Galaxy, you can look at the ETF ACDC. Or if you want to invest in a professionally managed fund on the ASX that's managed by stock pickers, you could consider Loftus Peak and Hyperion, who we heard from today. Now, their ETFs are available under the codes LPGD and HYGG. For more information, please head to Bell Direct's website.